Good morning, I'm Carol Harmer and I'm here today to do my weekly video on the euro and try my hardest to make it interesting and not use the sentence at all of losing the will to live. So that's my job for today. Well, not just my job for today. This is my job for you guys that are looking at this weekly video. Now, when I show you the chart, you will understand completely what I mean and why it seems to be that every other currency is more exciting than the euro. But what we'll do, we'll have a little look, as we always do. We'll have a little look, see what we can come up with. So there we have the weekly chart. We can see that we've hit that downtrend line, not last week. Last week was seriously losing the will to live. But we hit the 55-week period moving average up here. The week before, as I spoke to you about, we were below the 200-week and the adaptive moving average. And last week, we really didn't do anything. So what are we seeing? We are seeing this in like just a consolidation range. We are not breaking down the downside, but we're not breaking on the upside either. If we look at what we're actually doing, we're really not doing a lot, as our indicators are as upset, if you like, as we all are, because no one likes to trade a market that doesn't go anywhere. Now we are currently unchanged from where we closed on Friday. Look at how we hit the 38.2 on Friday. Okay, let's just take a look at our pivot point analysis. Now, I always put the pivot point for the day on the chart. You can see that is coming in today at 112.61. We're currently trading at 112.73. I always say Mondays isn't a day to trade. Mondays is a day when you want to look what the market is doing, you want to see where it's unfolding to, and then you can take a position either later on today when Europe comes in, when the US comes in, or you just keep your strategy in mind for when the market actually wakes up tomorrow morning. Now, what is the interesting thing that sticks out on this chart? It is, in actual fact, this double base here. Now, when we broke the top of the double base formation here, we came back, we had a little sniff, and then we've gone up. And we have nearly attained highs over here of 114.48. You've got another high at 114.38. You can see quite clearly here, our high was 114.12. So taking this last little bit of information, just this bit, we know we've double base down here. We can see that in our little eyes that we've got that to watch out for. So what now? Okay, if you look at the 38.2, it is coming in at 12.76. If you look at the 9-day moving average, you can see that that is coming in up here at 12.85. There is no reason at all why we cannot trade higher. So we know that markets don't go straight up or down, okay? So we know this. So we know that when euro went down to 111.05 for the second time and didn't break, you automatically have a double bottom. Now that is a technical chart point pattern. One of my favorites is double tops, double bottoms. You always have to buy those or sell those. And the reason for that is because the market's looking at them. And now I've been doing this 38 years. Obviously, 38 years later, you've got all these like whiskies, blah, 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 and the algo systems, and they look at patterns and they do this, that, and the other. However, a good trader will eyeball that market. It will know the low of the previous reaction, and they will act accordingly. because they look at monthly, weekly, daily, 4-hour charts. You need to know where the important support and resistance points are. You need to know, is there a pattern emerging? You need to know what to do with that pattern that's emerging. You need to know the measured target of that pattern if that pattern breaks up. But the important point is to preempt, because your risk reward is so negligible that if you did buy 11.20, you're out at 10.75. It's risk free. You are risking, normally we used to risk 3 to 1. Then it went down to 2 to 1. And now we, on the euro and sterling, which I'll show you in a bit, but on the euro, the upside was so much more greater than the downside. And the other thing to know, guys, is that when everyone is calling for a market to go to parity, okay, and we saw that back in 2016, 15, when the euro went to 103. So when it's public news, if you like, that the market's going lower, 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 reversal watch. Where did it last stop? Preempt it, it did it, and away we go. So let's, bearing that in mind, let's take another quick look at it. So you've got your pivot point. There it is, 1261. We've hit the 38.2. We're backing away from it. We are just above the daily pivot. Now, in pivot point analysis, it really is good. What you do is it's only the high, low, close, open of the previous session, okay? And then all it is, it's a mathematical calculation. You just divide high, low, close, open by 3. That's it. That's your pivot. The more you do, I won't go into it now because, you know, life is too short for you guys. But I put pivots on my reports every day, and I use them every day. Now, the first resistance pivot point I have is 1284. Where can I tie that in with up here? Okay, 1276, which is roughly where we are now. So we know that 1284 is the level, okay, that we need to break above. We know then the next level is 1298. Can we tie that in with anything else? Yes. The 50% fib at 1302. Okay, and the little tops around here. So you have to have a logical reason for trading. That's chart-wise. Now let's look at the technical indicator, the technical data. All the things that I look at are up. We are above the 55-day moving average. We are above the adaptive moving average. We are above the 9-day moving average. We have hit the 21-day moving average, and the 200-day moving average is sitting there quite comfortably at the 61.8, and that's coming in, as we can see today. That is going to be around about the 1325, 1328 area. So that's the aim for the week. Now, even if markets retrace back, okay, which they do, they really do. So let's say we are in a downtrend in the euro. It can still correct 50% to 61%. But the important point on the euro at the moment, God save me if there is one, is the fact that the double bottom held. And when all the news came out bearish for the euro, it went up. Now, I know people and I know traders, they go, you've got to look at the news, you've got to look at the news. Of course you have. But you've got to know what level to go in when the news comes out. There isn't one ever economical figure ever that has stopped at a level in a market that isn't on a chart. Now, I learned that to my cost 38 years ago. Central banks back in the mid-80s used to ring me, Carol, where would be a good level, it was $mark then, to buy $mark, sell $mark. I would say, I think the level to buy and sell dollar mark would be blah. And then they say, thank you very much. I go, thank you, Bundesbank. Go straight over to the dollar mark dealer and go, there is where Bundesbank's coming in buying the dollar mark. And they go, yeah, okay. But they were scalpers. So the Bundesbank were fantastic with charts. Okay? The Bank of Japan, when I worked at Nomura, fantastic with charts. Credit Suisse, First Boston. Swiss Bank's really good with charts. You know, now I've run technical trading departments in all those banks. So, you know, I don't bring it out of the thin air. I actually have been in it 38 years and I've seen it, been there, got the t-shirt, directed the film and starred. And, you know, anybody should, could, will be able to trade these markets if you know what you're looking for and you think like a trader, a bank trader. You do not think like a spot trader or a HFT trader. You want to actually trade the market. You want to take a position in the market. You want to be like outside the box. You want to be like the guys that are moving the market, which are large institutions, which go onto the banks that are they are customers of the bank, and that's where you get interbank trading. All right, you would be amazed at how many retail traders do not know what moves a market. If you don't know what moves a market, you're not really going to be able to trade it, are you? But cutting through all of that, please bear in mind that the market is now 100% more technical than when I started. Now you have fundamental traders who look at charts. A pure technical trader like me never looks at economic numbers because they're a month behind. We know about them. They're already priced in. There are 1,000 variables on that data, you know, and if my two economists at Credit Suisse, 3, couldn't agree what the economic data was going to do to the currency or the dollar or the bond market or the stock market, how can the world? But the world knows a chart point, okay? They do. I still sit here 38 years later engrossed in what I do. I love what I do. I find it spooky, really spooky, the way these markets still work the same as they did back in the day. You've got to negotiate the algo systems now, but all you do, you just know where they're going to stop you out. An algo will hunt. An algo will look for chart patterns. The algo will look for stops. And if you're trading currencies, the algo shouldn't take you more than 35 pips above your stop level. So don't put your stop level in at the resistance, should be took out. The algo will take you out. They're programmed for it. That's what their job is. So, and you've got to remember, these algos trade all markets, all over the world, and they're in and out, in and out, in and out, in and out, in and out. All you're going to do is get caught up with the chop. You don't want to do that at all. So using charts is disciplined. I'd say unemotional, but trading is emotional. You know, sometimes I have to just get up, walk away. But I believe in what I do. I can show you what I do. And if you follow the very basic rules of trading, there isn't anybody that wants to do this full time that shouldn't be able to do that. Okay? Anybody can do this. Anybody. You know, if somebody had told me as a 24-year-old divorced mother of 2, 38 years later, I'd have done the things that I've done, I would have laughed. But I'm not laughing now. Now is the time, and I'm tired of knowing all these poor retail guys just getting chop, 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 blowing up their accounts, and sayonara. So let's go back to the euro and see what we're going to look at today. Now, the euro has been written off. I personally don't think it is. I think you're in a buy dip scenario, and I think anyway down to here, if you look at that, now we know that that trend line is intersecting with that trend line, which is intersecting with the 55 and the adaptive moving averages. So if it gets down to here, guys, we're buyers. It's that simple. We're longer sterling anyway, but you want to be a buyer if the market gets down to here. You are not going to hold that position if it breaks here, okay? So it really is a very risk-reward good trade to do. And that will take you through. This is not going to alter all week. You'll be able to follow your line. If you put the lines on the same as I have, you'll be able to follow your lines. And obviously, this get higher as the week progresses. I think the euro goes higher. I think there's absolutely no reason why we can't go back up to 1365. You've got to remember, it's only 18 months ago we were at 125. Okay? So bearing that in mind, and the fact that, you know, people are writing the euro off, I am in the buy dip situation, and I'm going to stay in the buy dip situation. Well, that's all from me this week. Look at other currencies. I will try and do you a report on Wednesday about things that are actually moving. But take care, have a great week, and I will catch you all next week. Bye for now.